Hello everyone, it's Dale here with a new video from the recent trade series. In this video I'd like to take a closer look at two trades, one on the Australian dollar and second on the Canadian dollar. I took those trades yesterday and I think that they beautifully demonstrate how important it is to properly place your take profit and stop loss. Actually, I was shooting a video yesterday about this, maybe you saw it, and today I'm going to follow up with two more examples. So yeah, let's check the trades out. What you see on your screen now, that's chart, a 30-minute chart of the Australian dollar, US dollar. And the trade which I had here yesterday was based on this heavy volume zone right here. This was a heavy volume zone which got formed within this uptrend. So this heavy volume zone represents a place where buyers were active as they were pushing the price upwards. My level, my long level, was in here. Stop loss was here. The reason for the stop loss placement was that this stop loss was behind heavy volume zone, and that's important. You always want to place your stop loss behind heavy volume zone. This is the heavy volume zone and the stop loss is below it, right? Also below the wick of this candle, right? So that's why the stop loss was in here. If you remember that from the video which I shot yesterday, I was stressing out there that stop loss always needs to go behind a heavy volume zone or behind a barrier. And this is the barrier. So that's the stop loss placement. As you can see, initially the price went against me. This is where I entered the long and the price went against me. But it did not hit the stop loss. It reacted to the barrier, this being the barrier, and eventually turned and price went upwards. Now, regarding the take profit, if you remember, yesterday I was talking about the one important rule about take profit placement, and the rule is that you want to take your profit at the beginning of a heavy volume zone. So, what I did here was I looked how the volumes were distributed in this area where the price was coming towards my level. Now, in this area, there was this important heavy volume zone. This was the beginning of that heavy volume zone, and this is where I had the take profit. So as you can see, it was really crucial in this trade that the stop loss was right here and that I had the take profit in here. And as you can see, the price just hit that resistance level based on those volumes and then turned downwards, right? So if I did not place the stop loss and take profit properly, this could very easily have turned into a losing trade, right? If, for example, the stop loss was tighter or if the take profit was a little bit higher, then this would be a terrible trade, right? But it was a winner, only thanks to proper stop loss and take profit placement, right? So that was the trade on the Australian dollar US dollar. And let me now switch over to the US dollar Canadian dollar. That was what the second trade was. And let me show you first what it was based on, alright? And then we will talk about stop loss and take profit placement. So, before you, this is the US dollar Canadian dollar 30-minute chart. And if you look into this strong selling activity, then there was this significant volume cluster within the selling activity, right? And very similarly as on the Australian dollar US dollar, this volume cluster represents a place where sellers were active, adding to their short positions. My short level was in here. So this is where I went short. As you can see, there was also a nice confluence because there was also a weekly view up in here. This is the yellow line. So that was a nice combo of two trading setups. And when the price hit that level, I entered the short trade. I went short from there. My stop loss was in here. And the reason for the stop loss being in here, and you probably know that now, right? was because this was behind heavy volume zone, right? Behind this heavy volume zone. Because the heavy volume zone represents a barrier, right? The price should not go past the barrier. If it does, then it's best to just, quit the trade. Now, this was the stop loss, and the take profit was based on volumes. The same trick as I showed you on the Australian dollar US dollar. The same thing that I do over and over again all the time. You look at the area where the price is going towards your level, and you use the volume profile to look into the volume distribution there. This is a significant volume zone, right? And the rule is you want to quit the trade before the price hits this heavy volume zone. So you quit the trade at the beginning of the heavy volume zone. So this was the take profit. The same rule all over again. As you can see, later the price really reacted to this heavy volume zone, as I was afraid it would, and went upwards. So yeah, let me tell you, I'm really glad that I quit the trade in here. And again, this could have been a terrible trade if I didn't place the take profit properly, right? This could have easily turned into a loser, but it didn't. Alright, so this is how I place my stop loss and take profit. The rules are, pretty simple, and you just need to apply them for every trade. It is as simple as that. And by the way, the levels which I'm showing you, I'm not just, cherry picking the best trades, because those are levels that I publish every day for members of our trading course. You can see it in here. This is the yesterday's prediction. Everybody who's in the members area could have traded those levels alongside me. This is the level on the Australian dollar, and this is the level on the Canadian dollar, right? If you want to join us and trade with us every day, then you want to visit our website. It is at traderdale.com, and if you click this button, Trading Course and Tools, then it will take you to this page where you can browse my trading education and custom-made trading indicators. There is the volume profile pack focusing on volume profile trading, the order flow pack focusing on day trading with order flow, and then there's the VWAP pack. If you scroll down a bit, you can get all three packs together in one discounted bundle. And if you would like to trade alongside me and other prop-firm traders in a live trading room every day, then I recommend you visit this page. FTA stands for Funded Trader Academy, and on this page you can book a one-on-one call in here where we'll walk you through the service, and then you can decide whether or not this service is right for you. Right, so I hope you guys enjoyed the video, I hope you found it useful, and I'll be looking forward to seeing you next time, and until then, happy trading!